Hello there, Maverick traders. This is Rob Reinhold, and it is September 11th. Before we jump into the market, I actually want to go back 23 years to that day of September 11th and just talk about, of course, how horrible that day was for really Americans and everyone around the world. But I remember being at the Maverick trading office. I always got there about an hour before the bell opened, and I remember that all of the quotes went off on our trading system, and we're like, "What's going on?" And we turned on the TV and we saw what was happening, and it was just devastating. The markets were closed for 4 days, and during that time, again, the nation mourned. It was a crazy moment, and it's one of those things that I just wanted to talk about this, not just to hear myself talk, but for younger people who didn't really understand that or were too young to even remember it. This is just a reminder that anything can happen in the world of trading. The market was already dropping, and I remember being heavily short already in the market when that happened. And I remember the guilt I felt knowing that this market was going to plummet and that I was going to profit from it. Being on the right side of the market, look, we have no idea when things are going to happen, why things are going to happen. But if we just trade with trends, I'm not saying that these bad things will happen. What I'm saying is you're going to be in the right direction for most of them. So again, memories to all the people who lost their lives in 9/11 and the first responders, just huge props to them. All right, let's get into trading. In this session, we're going to talk about what happened during the day. We're going to break down all of the news, and we're going to take a look at the markets. Did they change score? And then, of course, I've always got some trading opportunities for you. I've got 2 bullish setups today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, let's get into the markets here. And the markets, let's start with where we were in the beginning. The futures had weakened overnight a little bit, and then we got the CPI report, and it was a little bit hotter than expected. The headline number was plus 0.2%. The core was supposed to be plus 0.2, and it came in at plus 0.3. So right away, the futures market fell down, and the bond market spiked up, and then the buyers came in. And look and see the buyers. They were buying all day long, and they were still buying at the close. This is the definition of a reversal candle. When it was really bearish in the beginning and then really bullish at the end, it tells you that, boy, the momentum sure changed and the buyers and sellers really changed here in this day. For the day, we had the Dow close up 0.3%, S&P up 1%, the Qs up 2%. So really, the standouts were the Magnificent Seven. There's no question about it. But look, the S&P up 1%, the Russell up 0.3%, still a strong day. When we take a look at the internals, if we took a look at these 1 hour into the market, they were dreadful. By the end of the day, they turned around to where we had more stocks up than down. Let's take a look at this chart because we've had some messy price action here over the last little bit. We ran up to previous resistance, we hit resistance, and then we had a week of some pretty rocky selling. We had this candle here, we had this hammer candle here, and another hammer candle here. And I really want to focus on this candle. And I want to focus on the bottom of this wick and take a look that it is pretty much the bottom of the wick last week, or the candle last week. So we've got this 5,400 that is very strong support on the S&P. We opened here, we came down to this low, and by the end of the day, we rallied up. This is a very, very strong candle that followed another candle that we had some pressure put on us, and then the buyers came back in. These are telling you the buyers are out there. We went to a -1 when we went below this moving average But I remember hearing Corey say, hey, let's not get too bearish. It's not bearish price action yet. We still have a lot more bearishness to go before we get to a -2, -3. So let's not get too bearish. And you can see the markets have popped back up. Looking at this price action, I don't see any reason why we don't make a run up to prior resistance. That doesn't mean it's going to happen. We could easily have a red candle tomorrow. And if we have a red candle tomorrow, then it's like, hey, you know what? We're here. We're in the middle. So at this point, when we score this, we are at a 0 technically. You could have been at a -1 at the end of last week. This week, we're at a 0 at this moment. Anytime we're around moving averages, it's really important to stay neutral, to stay maybe leaning a little bullish, a little bearish, but that's it. This is not bull market or bear market price action at all. I mean, take a look at this whole thing here. If anything, we're getting a little bit of a wedge candle here, a wedge formation here, where we're just getting lower lows or lower highs and higher lows. This is not bull market price action, but it's not bear market price action either. This is neutral price action. As I said, most of the activity today was in tech, communication services, and consumer cyclical. So the real cyclical parts of the market did very, very well today. And that's telling you that's the first place the buyers want to go into. So if we do get continue buying, I'm sorry to say I would love to see a broadening in the market, but that's probably not going to happen. This is where the money is going, and this is where the quick money wants to go. If we get more bullish action, I think the money keeps going into these areas. So here we are. We're at a 0. Like I said, last week we could have been at a -1. The week before, maybe we're at a +1, +2. It's important to stay in the middle here. It's important because we don't have a clear trend up or down. So recognize that this is where we are. We have a very famous saying in Maverick, trade the market in front of you. Not the market you want it to be, not the market you think it should be. The market in front of us is messy. It's messy, it's near moving averages, it's not clear yet whether we're going to break up or down. So that's how you want to make your trades based on that outlook, which is I'm not bold enough to go long, I'm not bold enough to go short, I'm going to stay somewhere in the middle, balanced with my overall portfolio. That being said, when I went and looked for trades, man, I found a bunch of good bullish trades. I'm going to say like 5-to-1 good bulls versus bears. There are so many bullish trades out there. And this first one I want to take a look at is Nova, N-O-V-A, Sonova Energy Corporation, solar company, beautiful high base. The thing I love about this one is that when the market was challenged last week, it wasn't. It just stayed in its base. I like this one here. Now look, it hasn't broken out yet, so if you are a very directional trader, you want to wait for a breakout. Me, I don't mind putting a position on in a high base, but it's got to be something like a diagonal call spread. So like a 10-12 diagonal call spread, or it could even be a 10-12 vertical call spread. It's going to be positive theta. It's going to help me out if it just sits here for a while. If you want to be aggressive, I think you got to wait for the breakout somewhere right in the high 11s, maybe 1185, 1190 would be the breakout point. But this one looks really strong. I love the fact that it didn't sell off when the market sold off. Same thing with this one. This is Roblox. Now look, I know that this is a controversial one. For those of you that have kids, you probably do not like Roblox. My kids are now too old to play this, but look at this beautiful high base. It doesn't matter what the underlying stock is. Look at this chart. It wants to go up. Take a look at the last two candles. Gap down, close at the high. Boy, the buyers are there on this one. I think if you want to be more bullish on one of these, it's definitely this Roblox. It's breaking out right at the moment here. 44.46. You could do a 45.46 vertical spread. I'm using 46 as the target because I'm not ready to get super bullish here. If I was more bullish, if we were at a +3, I might go all the way up to 48, maybe even up to 50 on this one to give it enough time. We are not there in the market yet, so I'm going to 46 on my target, and I'm being fairly conservative on all my trades here. Let's talk about tomorrow. We got a very impressive reversal candle yesterday. We got another one today telling me I think we are likely to move up to our resistance areas. What we do there, I'm not going to make any call other than we're either going to bounce off it or break through it. I know, that's a very, very bold call here. We'll have to see what happens then, but we're going to get slowly, progressively more bullish as the price action dictates based on what actually happened. We do have the PPI tomorrow. The PPI has typically been weaker than the CPI. I think this report comes out and soothes anyone who was worried about the CPI report, but we'll have to wait and see what happens. And there actually is some decent earnings tomorrow night with Adobe coming out. So if you are in Adobe or in some correlated tech, you definitely want to be watching for that one. Thanks for joining me, everyone. And that is the Market Roundup. Goodbye.